Go. I just started. Yeah. I have. I'm live. Check market buzz. Market buzz. Market buzz. But I'm late. I should have said it 4 minutes ago. So yeah. Hello everybody. Welcome to another episode of Market Buzz. Today we are watching the FOMC and the Mag 7 earnings. Man, it's gonna be an interesting day today. So everybody lock in, get ready, and let the trade begin. Well, I might not be trading. My trades are already placed for this. I lost $50. Hello, Graham. I'm good. I'm good. Yourself? All right. I need to find. I'm so behind so many things. All right. So to get this out here. I am so ready. Market's kind of euphoric on today's news. I'm not gonna lie. Feels very, very good. Obviously, Powell will crash the markets a little bit. He might be a little bit hawkish. At least that's what Demetrius is expecting. Yeah. I made a song today. But yeah. Gold, silver, and the S&P are all-time highs. Pretty much everything. AI plays. I think NVIDIA's lagging and the Max 7 are lagging, which gives me a lot of hope for the earnings today. If we just meet expectations or are better than expected, would be very good. Very good indeed. I had to restart my PC, which kind of took a little bit. I need to go to Twitter. We need to go to the Fed, the FOMC. Yeah. I'm going to go for the statement, and we have to see what the difference are. So, Timerios. I'm setting everything up. I've been taking a break because I know I'm going to be here for a while. I think I'm gonna have to stream today for a little bit. Today is heavy. Yeah, it's been nuts. I'll show the charts actually. Even oil is sitting at all-time highs. Market did turn around a little bit, eh? Funny enough, a lot of my plays are actually up, which is good. It's like my portfolio is up, but the market overall is not moving much. All right, let's go here and let's share a little bit of a screen. Let's go to layout. I'm gonna go here, and I'm gonna try to share screen. And we're gonna go here. The S&P 500 is interesting. Interesting for sure. The AI plays are finding a footing. The companies that took a major hit in the last couple of days, like healthcare, is actually bouncing off the lows, which is fantastic news because I bought a 3x. Don't worry. We just started, so it's okay. You're good. You are good. Take some of the things away. There's that usually Powell allows for intraday. Depending on how dovish they are. I want them to cut so bad. If they caught, $800 on a random bet that I placed. Welcome. Yeah. I'm quite surprised. So Demetrius is expecting them to be hawkish. I'm actually expecting them to be dovish. The data, we can't really trust it. I'm expecting more cuts. Lale from eToro said that she's expecting March to start the cutting cycle again. I just don't understand why you would just stop it here, right? They've sort of signaled. But who knows? Maybe Powell is upset. I don't think he will. He's being super I think he's being good. Same here. Same here. So I had to like find a way to get around it. But yeah, it's okay. I lost $50. The chances were super slim that they were gonna get a cut. I don't think we get a cut. I mean, the chances are that we really don't get a cut. Right? So I wouldn't even expect it. Like, I think we're less than 2% chance of getting a rate cut today. Yeah, well, 2.8. I'll take 2.8. Yeah, they are. We are expecting it to keep at the same. They're going to be hawkish. The thing is just like they want the flexibility, and Trump is not making it easy for them. They're making it complicated. So Trump's making it a little bit more complicated here. So yeah, we're likely not to get a cut. We'll go through the statement, and then if you're always looking for a little bit like Timerios, if you're ever looking, the Fed Whisperer right here, he works for the Wall Street Journal, I believe. Yeah, he does. He always posts the things that change within the statement. Something to pay attention to always, because it's good. And then I made this song too. Actually, I'm gonna try to keep it. I'm gonna put it at 20 seconds. Yeah, there we go. So I don't have to deal with that. So I have to manage that. I added sound effects to my Discord too. Do I have anything here that you guys are not allowed to see? Big question. Yeah. I'll let them. The VIX is sitting at 16, so it's a little bit higher than expected. What's the S&P doing today? The S&P is red today, and the Nasdaq is a little bit red today, but it's still overall still green in a sense. Like it opened so high today. That was so interesting. And then I bought some GE Vernova that I was waiting for an entry, and I missed the last one. But they gave me an entry today after the earnings. The earnings were good, and yeah. So yeah, have a look. So yeah, this guy worthwhile, definitely worthwhile checking out. PowerPoint. I need to open the Fed decisions and see here. I didn't do the homework today. Wow, I have 5 minutes to do the homework. We don't get summary. We're gonna make projections on this one. No, we don't. No, we don't. We don't get summary. We're gonna make projections. We get that in March. So, I mean, the numbers have been so weird, and the Fed is not trusting the data. That's the reason that we're thinking that they're gonna stop. There's a lot more does in the Fed right now, but it doesn't seem like we're gonna get it our way. If we get it, Intel bounced off the lows. I called this trade. I feel so good. But this was a quick one. Like, you had to be so quick on this one. The increased volume is telling me that this is not done, right? Like, we're just seeing more volume coming in. This is just like take profits while you can, retest. We could come back down. I mean, this could be a bubble, but we'll see. All right, let me put in the guy that speaks in my ear. So we're expecting the interest rate to stay fixed at 3.75%. It'd be so good if I get it right. It'll be so good. I should have put another $50 on that trade, but it's not a trade. It's a bet. I don't bet. That's the thing. So I'm just like I had a feeling. I had a really strong feeling. So I put $50. I put my casino funds into a bet. But yeah. My stocks are liking. Intel is up. Fluence is up. Fluence is at 31. And I made this song today. Wow. I'm gonna share. Now I have to make sure because we're gonna watch the video, and hopefully Dimitris joins. Yeah, it's true. No, they probably won't, right? I mean, like, that's probably inflationary if there's any issues there, right? So, but I don't think they would. Like, they have to wait and see what happens, and they'll act accordingly. I just don't see the Fed caring at this point about that. So I wouldn't take it into consideration just yet. It's a problem. I need to be so careful when I do this. I don't like this. I would have, if I knew I was going to be alone, which I sort of knew because I didn't tell anybody I was going to be streaming today. Yeah. Share. All right. Let me know if you can hear this. I don't know if you would be able to. I don't know if you guys will be able to hear that.
Oh, that high, flashing on the screen. Ever talking gas ain't safe and clean. Market at highs, we room at peak. Session talk on the non-stop beat. Trumpets keep crazy step. Never just dreaming, Monday down. So they buy a rock in the hall downtown. Be 5% just to lock it down. It just seems it sits there cold and bold. Doesn't get it, doesn't go, doesn't fool. No cash flow, no pride of life, just a shiny feeling under this. It's a rock in a cage, cause you fees just to sit there and age. No earnings call, no debt, no grind. Just put my fear in a nervous mind. It's a rock in a cage, cause you fees just to sit there and age. No earnings call, no debt, no grind. Just put my fear in a nervous mind. I want treats, I want code, I want power bricks overload, I want company.
I should be able to hear also this guy speak. Why is he so quiet? Huh. He was really quiet. He should be here. Give him a call. Be like, hey, Dimitris, because he's gonna be watching this. But it starts at 7:30, so it's okay if it's not here. You know, we're just messing about before. I wanted to do like an overview and stuff. Meh, I'm tired. I'm going skiing tomorrow. I'm making money. I don't mind. I'm not upset. I don't know. I'm still bullish on the year. Like we had our chance to get back
10
in.
seconds.
We're gonna get 10 seconds. This is what I hear. This is like my life. Like this is what you guys hear. Like this voice is always in my head now.
No change, no change. Rate remains unchanged at 3.75% as expected. Looking to the statement now, the Fed voting 10-2 to hold the benchmark rate in 3.5 to 3.75% range. Governors Waller and Myron dissent in favor of a 25 basis point cut. The unemployment rate has shown some signs of stabilization. So the unemployment rate has shown some signs of stabilization. Job gains have remained low. Inflation remains somewhat elevated. Unemployment rate has shown some signs of stabilization. Uncertainty about the economic outlook remains elevated. The Fed have upgraded their assessment of economic activity and says it has been expanding at a solid pace, say that they are attentive to risks on both sides of the dual mandate.
So yeah, this is a little bit more hawkish because it says
the Fed reaffirms a statement on longer run goals, monetary policy,
both mandates. They should have cut.
And their monetary policy strategy.
They should have cut. I'm in the cat that they should just continue to cut just a little bit more. But well.
So for the markets then, S&P 500 saw a little bit of a move towards the upside here, as again there were two dissenters, Waller and Myron, dissenting in favor of a 25 basis point cut. There was also a part in the statement where it cited that the unemployment rate has shown some signs of stabilization. Treasuries are steady as the Fed holds rates with two dissents there. Dollar little changed. S&P 500 just whipsawing as well. Not really much of a reaction here.
Let's have a look. I mean, like we were expecting this, so this is just it reaffirms the theory.
We have posted the FOMC rate statement as well on the feed for those interested.
All right, so let me go to Tim Rios here because he always posts this, which is great. He's really good. So if you're always looking for someone, he's really good. Let's have a look. So right here, right? So these are the changes that we see right here. So it's like available indicators.
Dollar index seeing some strength now in the wake of the FOMC decision there. The Dixie up 1% on the session so far. Dollar yen up 1.2.
Wait a second.
S&P 500 now seeing some weakness come through as well. Slightly delayed reaction across the markets here.
Yeah, the market's coming down a little bit. Interesting. this unemployment rate has shown signs of
And
stabilization.
US short-term interest rate futures are sliding as the Fed keeps the policy rate on hold.
So inflation they have taken has moved up. So it hasn't moved up. So it's stabilized too. So this is really good. But again, this puts the idea. So he's probably going to be. So I'm assuming that if this is hawkish, he's likely to go dovish in the gold, which could be good. Market so far flat. I mean, it's moved to very little. Let's have a look. The committee is attentive to the risk to both sides of the dual mandate. So you see, they took away the employment. So it's more balanced now, right? It's just small little changes. It's crazy that we pay attention to like so little, but it's important. Support of this gold. The committee decided to maintain the target rate of federal funds rate. Okay. No changes, right? The committee judges reserve balances of decline ample levels will initiate purchases off, but this is already maintained, so we don't have to worry about that. Yeah. Okay. Right. So let's have a look, and then this is monetary policy. The Federal Reserve.
US Treasury 10-year yield rises further as the Fed stands pat. Last up 4 basis points around 4.26%.
The Federal Reserve System, but it aims to maintain 6.5 effective. Right, as a part of the policy decision, the Federal Open Market Committee voted to direct the open market desk of the federal to instruct or otherwise to execute transactions in the system open market account according to the following domestic policy directive. Undertake open market operations within the federal funds rate. Okay, that's fine. Conduct standing overnight repurchase agreement. Okay, and then conduct standing overnight reverse repurchase agreement 3.5. The limit of 160 billion per day. So that's the flow right there. I wonder what changes are based on this, because this is increase the system of market account holding securities through purchases and treasury bills if needed. Account holdings of securities through purchases of treasury bills and other treasury securities with remains. Ooh, is this new? Is this new? Oh, wow. Wow, really? Wow. Rollover at auction of principal payments of Federal Reserves. Treasury security. Invest all principal payments for the Federal Reserve holdings of agency securities into treasury bills. Is this liquidity? Are they adding liquidity back into the market? Ooh. What? Where's Dimitris? Where's Dimitris when you need him? Where's Dimitris when you need him? Okay, I'm going to start sending messages. Nobody's talking about this. Oh, I have so many questions. Market didn't care. I mean, like, if we go, let's go here. Market didn't really care on this. Man, this stock took such a massive hit last time. I'm ADD. His hits, and yeah. Man. Like, we came down a little bit, but we're back up. Have a look. There was something else. Save that if I can. See, that's why I don't like it, because it shows everything. It's interesting because it's like they're providing liquidity, but in a different way based on this, which is weird. Um, like I'm not 1,000% sure, and I want to double check this, but because the thing is like I have to check what they were doing before because I know they were buying treasury bills already, but they are increasing. So now they're extending. They're not buying 1 to 12-month treasury bills. They're going into 3 years. This is liquidity. This is injection. This is. And then I want to see what the levels were before too, because it's like I need to go back. Give me a second. I just need to open both. So yeah. So this is normal, right? This is what we were expecting. This is no big deal. This is what we were expecting. They didn't change it. That's fine. But there were some changes. The thing is like there are two tools that they have. It's like the balance sheet and then the interest rate, I believe, that the Treasury has. So those are the two sort of levers that they can play with, right? So it's like they left the interest rate fixed, but then they're inserting liquidity into the system by like buying this and giving money to the like re-injecting that money into the economy by buying more treasury bills through government backing and all that stuff. The thing is apparently the Fed has been intervening with Japan to get the dollar lower. And sort of like maybe like if we look at treasuries, let me have a look at treasuries here. Because that's what the thing that might have actually affected here. US treasuries. Let me have a look. Yields. Is this based on the yield or the price? Man, I'm so tired today. Yeah, market's up, man. Market's up. I'm up. Well, market's up. When I say market's up,
the White House there to meet banking and crypto executives on Monday.
I'm up. Just to let you know. But yeah. So this kind of puts it in. Man, I don't know. So effective 29th of January, they are increasing purchase agreements in many different levels. They're inserting
the Department of Energy announces a realignment of their critical minerals program.
Where's Demetrius when you need him? Where is Demetrius when you need him? He's probably in the gym. Okay? So I don't gym. I ain't nobody got time for that. I will put a song because yeah.
Changing the game now, no matter which legacy in. Gold didn't build the God, gold didn't train, no models loud, gold didn't shit, no pure, no phone, gold just sat in a hole, no style.
S&P's gonna be sideways,
yeah.
That was a little bit up. It pretty much reclaimed back.
To meet with banking and crypto executives on Monday to discuss crypto legislation.
Don't get me started on silver man. Thought I was smart, had a master plan. And no drill this, break out that. M.O.P. and Nelson, relax. Silver down, ego grew. George when I left, hope refused. So yeah, fuck silver, learn that class. That trade was ass, let's call it that. Yeah, I'm jealous, I'll say it loud. Watch you roll face on a same money crowd.
All AI is up. I don't want to hide. This tells me that the AI story continues.
Builders win when cycles run long. Gold wins when people freeze. Builders win when people believe.
Man, such a weird move. Microsoft today. I'm bullish on Microsoft, by the way. And you know who I'm really bullish on after yesterday? Amazon. I was watching Amazon Prime, and I pay for Prime. We were watching Amazon Prime, and we had 3 minutes of ads. Out of those 3 minutes of ads, there were probably like how many ads? Like 4 ads, 5 ads? About 5 ads. And each one of the ads allowed you to freaking put the item in your basket. That is insane. So yeah, I'm bullish on Amazon. This one here, I have a feeling it's going to surprise to the upside with this new thing. Yeah. Because like Americans have like, smart TVs everywhere. You lose money on the TV and you just make money everywhere else. It's insane. Micron. Yo, since I talked about Micron, and I don't want to like, because I get bad trades. Like, I don't get me wrong, I don't just go up, but I bought it here, man. My Micron average is sitting at 233. That's my average price. I bought here, dude. Like, it's crazy. Like, I bought there, and we've seen like an 80% rally, and this was telegraphed like no other. This has been one of the easiest trades I've ever made, and I'm upset at the fact that I didn't take the sizing that I should have had taken. That's the only thing I'm upset about, because I had the info and I should have pulled the trigger and I didn't. Even my missus is freaking making money with Micron. That's crazy, insane. Like, it's been rallying like crazy, and I don't think it's gonna stop at all. Like, ASML had earnings, guidance was great. It just doesn't stop. But yeah. All right. Okay. It's forward. And like, look at this. This is still a forward P of 9. So if like they meet expectations, this company booms. So something to pay attention for sure. What's I gonna do? Yeah, it's crazy. I've been selling out because I bought a 3x. I bought a 3x leverage ETF on it too, and I've been selling that position off as well, just because I just didn't like. Who would have thought this, right? But it's like it just keeps going. Yeah.
US money market fund assets are up $7.72 billion for the week ending January 27th.
Like this one, it was like, man, all the stars aligned, and damn. Then the Nat Gas, I've been exiting that NAS gas trade. That was also a good trade. There's been a good trades this year. I'm very happy with my performance so far. We'll see if it continues into the year, but I'm happy. What was I gonna do? I was gonna check out the S&P 500. So let's go into futures. This will give us a better idea of what's going on. Yeah, I mean the Dow is flat, the S&P is flat, and then the Nasdaq is a little bit up. Japan's up. Look, platinum is beating silver today. Even GE or Nova. So everything AI has just found a massive footing. It's not stopping. It's not stopping. Like, there's got to be hiccups for sure. Even Intel had them hiccups, but I don't think this story ends. Not yet, at least. Not yet, at least. So yeah. What was I gonna say? Yeah, even if we go to the 5 minute, right? 4 minutes. Let's go here. This will give us more. Excuse me, the daily, and I don't like that. So yeah. If we go to the indices, we can go to the. I don't know if this changes. I don't think it does. I think that's going to be the daily, but yeah, just not major moves. I mean, like the market is anticipating when Powell speaks, it's probably going to be a little bit hawkish. So, and then throughout the call, he's like, "Hey, we're just waiting for data. We still don't trust it." And then we have the possibility. What's the possibility of Polymarket having? Polymarket. Let's have a look. And then we're going to go into government shutdown. So this come down a little bit, but we're pretty much calling a shutdown. Market's calling a shutdown here at 73%, 76%. Question would be how long did the Democrats want to shut it down for? It's 2 shutdowns so close to each other. So like this was a massive spike. I think this was who was it? The one that was fighting? I'm flat to where I was. My options. I'm making money on my options today, which is great. Great. Oh man. Whew. So we got 13 minutes more. Feel free to ask. I'll have a look at companies and stuff for the little while too. I'm sad we didn't get the cut. Let me have a look at Fed decision in January. Like this goes to zero now. Bam. It was pretty much at like here. I think I bet it here. So I could have taken profits maybe, but I didn't. It was a Hail Mary. I didn't think we were gonna get it. Did I write? I was making a song about Mara too. Oh man, I still like it. I still hold it in my portfolio. You know, it's been dead money for a while now, but I still hold it. I still believe like it just takes like one good deal. And I think that they got a deal. Like they're gonna get a deal soon. I'm the only one talking about Mara at this point. We used to have like what was his name? Mara, lovely Mara. Wow, what's his name? Charlie. Talking about Mara. I haven't been keeping up with his videos, but man, people need to know. They just need to get a good deal there, and then they'll get the traction they need, and they'll be like, "Oh, we're trying to do." But the thing is, like, crypto has been so weird. There's just no risk on sentiment in cryptos right now, and it's like, I don't understand why. I don't understand why. I mean, it's just not gonna. Nothing is gonna happen until it happens, and you just gotta be in it. Because if you're not, then you just miss it. Same like gold, I guess. Freaking. But it's been so rough. It's been
So in
so
10 minutes'
rough.
time now, at the bottom of the hour, do get the FOMC press conference with Chair Powell. We do have a live video in the calendar. We'll get it out on the feed as well for those interested.
Somebody sent a message to Dimitri. Mara's earnings. They have already. They did. Mara already did. This is what I'm waiting for. I think they just equipped their first data center with inference chips. And I read this, I swear. They might actually do it this earnings. What did you ask me? Okay, sure, I get this from the source. February Fool? Next week. Ooh, get ready. Put it in your calendars. That's Wednesday next week. Let's go. That's exciting. Let's go. They're expected to lose money because of the drop in crypto. You know, one thing I'm upset about is the fact that they're not telling us how much they're mining right now. That upsets me. Because that was a very good thing. They were doing. You know what, Mike? You know what I might? Oh, for sure. I'll stream it. I have to watch the last one. I didn't watch the last one. But I definitely have to. Like, it can 100% move in earnings. Usually to the downside, but we're so low already. Usually when we're in the 20s, it goes down. But it's like when it's in the 10s, look at this. So, you know, take it with a pinch of salt, I guess. Oh my goodness. Somebody either knows something, which is very likely. I just don't want to hear anything about CapEx. Like, either keep CapEx the same or increase it. Don't slow it down. That would be pandemonium. Like, that would be get out of all of AI. Any slowdown to CapEx is GG's. The market will take it so bad. Hey, I'll buy Apple if that happens. They're the ones benefiting.
So in 5 minutes' time now, at the bottom of the hour, we get the FOMC press conference with Fed's Chair Powell. The live video is on the feed for those interested. US Senate Majority Leader Thune says, "I want to get funding done here and not sent back to the House."
Oh, you might be able to hear this, actually. Let me have a look. I don't think you might. I don't know if you might. Oh, you may not. Let me have a look. Oh, you might be able to hear this. Okay, yeah, you might be able to hear this,
Hurry up and let me ride it! Hurry up and let me ride it!
Minions! Tonight, we steal the moon!
Yeah, you might be able to hear that. You know what it is? You know what it is? This prioritizes the audio. I hate the fact that they don't let me control it. Usually it doesn't happen because I can control the feed. But yeah. Dish, I believe, is not letting me speak, but I'm not sure. I could be wrong.
Baja más, compramos más. Baja más, compramos más. Compren.
Listen, Tranquility Base here. The Eagle has landed.
Buy me Prada, Balenciaga, love the drama.
They say money can't buy happiness. Look at the fucking smile on my face.
Tell me that's not good. Tell me that's not good. Ah! It's so good. Let me text Dimitri. Maybe he has to be watching this, right? I know. I mean,
Shortly expecting the start of the FOMC press conference with Chair Powell. Again, the live video is on the feed for those interested.
likely. Buy more big. Oh, by the way, I might not be in the live stream. I might try to join from the mountain. I try to join from the mountain. Oh, he's late. He's late. Oh, he's not late. Oh, no laptop. Oh, no, the laptop is out already.
Good afternoon. My colleagues and I remain squarely focused on achieving our
Powell has now taken the podium. The
mandate
press
goals
conference
of
has
maximum
started.
employment
Says
and
the US
stable
economy
prices
is
for
on
the
a firm
benefit of the
footing.
American people. The U.S. economy expanded at a solid pace last year and is coming into 2026
Powell says the US economy
on a
expanded
firm
at a
footing.
solid pace last year.
While job gains have remained
Voice
low,
news
the unemployment
disconnected.
rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments.
I'm messing up.
Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So, yeah, really two questions. One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement, let me pull it out, was simply it used to say that judges that downside risks to employment rose in recent months. So we saw data coming in which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting. And that should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
Nick Timrose, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today on, I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to. This is really about the press conference and the economy and what we did today, and some ancillary areas. But I'm not going to be getting into that.
Can you say whether the Fed has responded to the subpoenas?
I have nothing for you on that today.
Damn, I wanted to know the political question.
Michael McKee from Bloomberg Radio TV. Have you made a decision on whether you would remain as a governor of the Federal Reserve? If so, would you tell us what it is?
You're not gonna
and
say
if not,
anything.
when might we anticipate a decision?
No, and I really, once again, have nothing for you on that today.
That's not his
That
job.
either.
You're not talking to Powell the person. You're talking
why
Powell
would you
the freaking.
want to leave it all under the circumstances?
Again, I don't want to get into this. Not something I'm. There's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
Like, ask him about monetary
Claire Jones,
policy.
Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the US currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So I have nothing for you.
But, what's your view on the market movements? What do you think behind them? Is it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department has that. It's their role, their bailiwick, and we stay off it. We do monetary policy and some other things, but we don't comment on the dollar. Sorry.
Which makes sense.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market in the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the beige book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting we're evidence of stabilization. So it's overall a stronger forecast, really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing.
So we haven't made, what we'd say about this was that.
Sorry. I know. It's because I'm using freaking Windows, dude. Give me a second. This is messed up. Come on. Yeah. I'm misclicking now. I messed up. Give me a second.
With questions you might answer.
There's a time and place for these questions. I'm simply here and there. The reason why we changed the statement, let me pull it out, was simply it used to say that judges that downside risks to employment rose in recent months. There's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market and the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the beige book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting we're evidence of stabilization. So it's overall a stronger forecast, really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing?
So we haven't made, what we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data, the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
Steve.
Steve Leisman, CNBC, and sticking with questions you might answer. Thank you. You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the SEP and the longer run rate, 16 of 19 officials are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. Maybe I missed by 1, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible. And if you look at the dealer survey, it was 10 out of of where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range, but so for some people they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy is significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course no one knows with any precision. So you got to follow up.
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the SEP from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, the Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Amira.
Thank you, Chair Powell. Mara Moakley from Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook and all that. And, we're in a position where, we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks to have probably both diminished a bit. So, we'll be looking at that. It's about how you weigh the risks to the two goals and how big those and quantify them. And so there are different views on the committee, and we'll find our way forward as the data evolve.
Why is nobody talking about the new thing?
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically, there are many different estimates, and they're all highly uncertain. But most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and that's a harder problem to solve. We do think tariffs are likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, inflation, core PCE inflation is running just a bit above 2% x the effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases that are begun. And that's what we expect to see over the course of this year. If we see that, if we see that, that would be something that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing, that in fact the downside risks reemerge or the data just get worse, we'd have to look at both of those. We have a two-sided mandate.
If I could, if President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that. That will depend on Congress's actions and things I can't speculate on.
Howard.
Howard Schneider with Reuters. Thank you for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the mandate as roughly balanced right now? And is the next move necessarily down?
I'd say that the upside risks to inflation and the downside risks to employment have diminished, but they still exist. So there's still some tension between the mandates. Are they fully in balance? Hard to say. And we think our policy's in a good place.
Carvana is in the freaking S&P 500.
I've just discussed reasons why we might change our policy, and we'll just have to see how the data lead us.
I'm wondering, you a minute ago you said you felt expectations were consistent with your mandate, that the 2 and the 10-year break-evens have moved quite notably in the last couple of weeks, I believe. Is there any concern on that front?
I mean, I recently looked at all of the both survey and market-based short-term inflation expectations have come way down. They were in a good place at the beginning of last year. They spiked around Liberation Day, and now they've fully retraced in the last few months. So that's very comforting. And the longer-term inflation expectations have remained in places that are very consistent with 2% inflation over time. So expectations have been solid, and they reflect confidence in the return to 2% inflation.
Andrew.
Apologies if this is a little bit repetitive, but in the past you've said that the reason you cut rates was that the risk to the labor market was greater than the risk to the inflation side. Is that still true?
We haven't made. You're right. We saw the labor market weakening, and we acted. Yeah. And I think that was the appropriate thing to do. We will always act to address what we see as the economy moving away from our goals.
Based on earnings.
risks to both of the variables are a little less. I think that the upside risk to inflation, again, a little bit less, and the downside risk to employment, a little less. I just would say that I'm not making a judgment about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Thanks.
Anna Swanson with the New York Times. Can you talk more about what you would need to see in the labor market to conclude it's time to resume easing? Do you need to see further deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things. And so there could be combinations, infinite numbers of combinations that would cause us to want to move. Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. So we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making similar judgments too on inflation, though.
And if inflation does pick back up and the labor market doesn't show further signs of deterioration, is there a chance that you could raise rates rather than simply remaining on hold? What would you need to see to consider hiking?
We don't take things off the table, but it isn't anybody's base case right now. Anybody's base case that the next move will be a rate hike. But ultimately we'll do what we think is the right thing. But that's not where people's expectations are right now.
Victoria. Hi, Victoria Guida with Politico. I wanted to ask, you've talked in the past about concerns about the U.S. fiscal trajectory, and we've seen in the Japanese bond market a lot of turmoil recently, in part due to concerns over their fiscal and long-term economic outlook. So do you worry that the U.S. could at some point find itself in a similar situation to Japan, whether for fiscal or demographic reasons?
Over time, you've seen that U.S. rates have remained they haven't moved a lot really for a while, but they haven't moved a lot because of what's been happening in Japan. So it's more of an over time thing. The U.S. federal budget deficit is, uncontroversially on an unsustainable path. The level of debt is not unsustainable. It's very much sustainable, but the path is unsustainable. And the sooner we work on it, the better. But right now we're running a very large deficit at essentially full employment. And so the fiscal picture needs to be addressed, and it's not really being addressed. So that's important. I'm not in any way connecting it to some sort of near-term market event, but ultimately it's something we'll have to deal with. And that, in the end game, that's where you wind up, is in some kind of a difficult thing. But that's not where we are. It's not what Japan is either. But it's certainly not where we are right now.
Does it reduce the effect of your rate cuts that longer term rates have overall not really budged that much?
I wouldn't say that. The thing is, technically, higher longer term rates means less accommodative financial conditions. But remember, many things move longer term rates. It's not mostly what happens on the short end. There can be effects of longer term rates from moving our policy around, but it's much more assessments of the fiscal path and fiscal policies and risks and things like that move the 10-year around. You can look back at and find periods where we've been very actively moving the policy
Sometimes
rate
it's the mic.
Over the course of a year, and over the course of that year, the 10-year is exactly where it started. So there's not a tight link between 10-year rates and the overnight rate.
Elizabeth. Thanks so much, Elizabeth Schulze with ABC News. Republican Senator Tom Tillis, who sits on the Senate Banking Committee, said he will block any Fed nominee, including the chair, until this investigation into you is resolved. Do you support this move by the senator, and what conversations have you had with the senator?
I've got nothing for you on that.
More broadly, what would happen to American households if the Federal Reserve loses its ability to operate independent from politics?
A little.
So really,
A little bit.
The point of independence is not to protect policymakers or anything like that. It just is that every advanced economy democracy in the world has come around to
that could
common
100%
practice. It's just an institutional arrangement that has served the people well, and that is to have a separation between to not have direct elected official control over the setting of monetary policy. And the reason is that monetary policy can be used, through an election cycle to affect the economy in a way that will be politically worthwhile. So I'm not talking about the U.S. context. This is every advanced economy democracy of any size. So it's a good practice. It's pretty much everywhere among countries that look at all like the United States. And I think if you lose that, it's, first of all, it would be hard to restore the credibility of the institution if people lose their faith that we're making decisions, only on the basis of our assessment of what's best for everyone, for the wide public, rather than trying to benefit one group or another. Yeah. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important. And the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
So
yes. I mean, I'm strongly committed to that, and so are my colleagues.
Archie.
Thanks. Archie Hall from The Economist. On that sort of stabilization of the labor market question, how much do you see the weakening we saw over the past 6 months, year, as a kind of data mirage around immigration and the government shutdown and so on that's now resolved? Or how much have we seen a kind of real underlying firming up in the state of the labor market, do you think?
Well, part of it is, to your point, part of it just is that labor supply, growth in labor supply has come to essentially a halt from a fairly fast clip of growth over the last couple of years, driven by immigration, and then the halt being driven by a very sudden stop in immigration. So many outcomes were possible with that. Supply came way down. It turns out that demand for labor also came down a very similar amount, maybe just a little bit more, which is why the unemployment rate has gone up. So I don't know whether that's a coincidence or not, but that's what's happened with that part. But if you look at other things, like, for example, just to pick a couple, the Conference Board's measure of job availability that came out, I don't know, was it yesterday or today? But, it shows, it's a survey showing that workers feel like job availability it's a very low reading. Just one reading, but it's an indication of softening. People, part-time for economic reasons, which is a category within the broader U6 category measure, has moved up significantly. So there are lots of, and I could go on and on, there are lots of little places that suggest that the labor market has softened. But you're right, part of payroll jobs softening is that both the supply and demand for labor has come down. Growth in those two have come down. So that makes it a difficult time to read the labor market. So imagine they both came down a lot to the point where there is no job growth. Is that full employment? In a sense, it is. If demand and supply are in balance, that you could say that's full employment. At the same time, do we really feel like that's a maximum employment economy? It's very challenging and quite unusual situation.
Thanks. And one more on growth and the kind of strong growth outlook, your strengthening growth outlook you're now seeing. How much of that is the fiscal stimulus we're seeing from the beautiful bill, the tax cuts, and all of that?
So you're seeing it already. You don't have much of the fiscal. I think the outlook, you're right. It's financial conditions and it's fiscal policy for 26. But you've got strong consumption that's been happening before financial conditions have been supportive, but before the fiscal effects really are shown. So essentially the economy has once again surprised us with its strength, not for the first time. And consumer spending, although it's uneven across income categories, but consumer spending overall numbers are good. And we're benefiting from the AI build out of data centers. That's another thing we're benefiting from. But economy overall, growth is on a solid footing. It looks like, and it's not just those things. It's just the consumer is filling out surveys that sound really negative and then spending. So there's been a disconnect for some time between downbeat surveys and reasonably good spending data.
At some point, and say, "What are you talking about?"
Thanks, Chair Powell. Christine Romans from NBC News. You talked about how consumer spending is uneven. The president calls inflation defeated and solved. The FOMC says it's a somewhat elevated inflation. But you talked about those customer survey or those consumer sentiment surveys and public opinion polls that show that most families say the cost of living is still issue number one. What is the conversation around the table with your colleagues about how wealthier consumers seem to be driving so much of the economy and why so many families still feel like they just can't make ends meet after 5 years of rising prices? What is that discussion like?
So a couple of things. One, there's something to it in that we know that higher income households that tend to own real estate and tend to own stocks, securities, and those assets have been going up in value, and increases in wealth do support spending over time. So, and that's clearly a part of the story. We also know that for some time now, for a year or more, we've been hearing from retailers, for example, that serve lower income customers, whether it be food or the big box stores or anything. They're saying the same thing, which is our consumers are looking to economize. They're trading down from brands and they're buying less, and it's changing their buying habits.
I woke up at 6 in the morning to take my mom to the airport.
That is a reality of what we're seeing. They're still consuming, but they're feeling it in a different way. I would say more broadly on affordability, we have a vast network through the reserve banks and also through the Board of Governors where we talk to small and large businesses and households, and so we do hear a lot about affordability, and we take that very seriously, and we take it to heart because one of our jobs is price stability, and so the best thing we can do for people who are feeling that squeeze is to keep inflation under control and, frankly, to finish the job of getting inflation back down to 2%.
You mentioned the AI build out as being a positive for economic growth this year. I wonder, as you look at the weakest year last year for job creation of a non-recession year since like 2003, are you concerned about AI maybe supplanting more entry-level work and entry-level jobs? And how does that play into what you're watching about the labor market?
So everyone, of course, is watching AI and the deployment and, trying to understand exactly what's happening. And there's a wide range of possibilities. It's hard to say. And of course, anyone who uses it is amazed at what it can accomplish, right? So every technological wave will eliminate some jobs and create other jobs. And it's always been the case. If you look back, wave after wave after wave, there will be some disruption, but ultimately technology increases productivity, which is the basis for rising wages. And it may not all happen immediately, but over time, it's what enables incomes to rise over time is rising productivity. So, and we always ask, well, this is going to be different, is it going to be different? And we don't know. And we may short term jobs that are being eliminated by the capabilities of AI. We may see that. We just don't know what the overall effect is going to be. So how to think about it in macroeconomic terms, it's very hard. We can look at the aggregate data. We can analyze, for example, there is some connection, it appears, between the low hiring rate for recent college grads and AI, but it's not the main or only driver. You hear large companies, though, many of them saying that they either won't be hiring for some time, or that they're hiring less, or that they're laying people off, and they tend to refer to AI when they do that. So we're all watching and learning, and it could certainly have pretty significant effects on the economy, the workforce, and our society. We don't really have the tools to address the concerns that may arise, but we have a lot of people who focus on analyzing it and try to understand what the macroeconomic implications are, which is our job.
Thank you.
Thank you, Chair Powell. Bayi from AFP News Agency. You mentioned earlier that on inflation, the broad expectation was for a one-time price increase and then for inflation to come down. And I was wondering, is your expectation still for inflation to start cooling in the second half of 2026? And if you could elaborate how far we are from target currently. Thank you.
So how far we are from target is, as I mentioned in my opening remarks, we had 3.0% core PCE inflation over the 12 months ending in December. And that's pretty much what we had the year before. So on net, no progress. But the story behind that is modestly positive in that most of the overshoot was in goods prices, which we think is related to tariffs. And ultimately, we think those will not result in inflation as opposed to a one-time price increase. Okay, so that's where it is. In terms of, you asked, no one thinks they will, ex ante understand really clearly, precisely when this will happen. But there's an expectation that sometime in the middle quarters of the year, we'll see tariff inflation topping out. So what we do is when a tariff is put in place, we track the effect of those tariffs over a 6, 7, 8, 9 month period. And you can see for that tariff, how long it takes to reach a place where it's affected the price level, and that's it. So we're getting better at that. And our estimate is that it'll be sometime in the middle of the year, but I wouldn't look for great precision in that. But, we'll be able to see whether things are moving in that direction. I think, we'll be able to see.
Richard Escobedo.
Thanks, Chair Powell. I'm Richard Escobedo with CBS News. I want to look outside the U.S. about what's happening outside our shores and how it impacts the U.S. Canada's Prime Minister said last week that there's been a rupture in the global order, and I wonder how you're thinking about geopolitical risk as it relates to the U.S. economy.
So I can't comment on that speech or statement or anything like that. Geopolitical risk for us is, a lot of it is around energy, oil. And so far we haven't, for all the turmoil, oil prices have come down, as you know, and so we don't really see much. Longer than that, it's trade, and the trade, our economy has pulled through pretty well, you'd have to say, given the very significant changes in trade policy. The U.S. economy has pushed right through. Partly that is that the way that what was implemented was significantly less than what was announced at the beginning. In addition, other countries didn't retaliate, and in addition, a good part of it hasn't been passed through to consumers yet. It's being taken by companies that stand between the consumer and the exporter. So that's where that is.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With third quarter GDP growing at 4.4% and the fourth quarter expected to have a 5 handle on it as to what the Atlanta Fed is predicting, at a time when you had a government shutdown and we thought that was going to shave off some growth, you've also got the fiscal tailwinds you've talked about, big tax refunds coming, potential tariff dividend. How could you cut rates and not spur inflation in that environment?
Well, we didn't cut rates today, but it would depend. It depends on how fast potential output is growing, right? I'm just asking in principle. I'm not saying this is what's happening, but there's growth and there's how fast the potential is growing, and at a time of high productivity growth, potential output is rising. So it really matters whether potential output is growing as fast as actual output, and it would matter over time. The numbers you cite were for quarters, and quarterly GDP is, you need to look at 12 months because quarterly GDP can be very lumpy. GDP was negative in the first quarter last year. So the overall, over the year, the numbers were nothing like that. It was more in the mid-2s for the year.
And how do you explain the divide right now between strong economic growth and the job market? Is it productivity that's filling the gap? And is productivity being driven by AI at this point?
So there has been, you're right, there has been a divide of solid growth, but what looked like a weakening labor market.
Printing.
And that can be explained by
increase their balance sheet.
by rising productivity. But I would say we do see signs of certainly of the unemployment rate stabilizing. So it may be we're seeing the beginning of the resolution of those two things. Also, as you probably know, the lore is that when GDP and the labor market get into an argument, in the end, the labor market data is more reliable. GDP data is just very hard to collect and understand, but nonetheless, I think we may be seeing that tension resolving a little bit. Too soon to say with any confidence, though.
Matt Egan with CNN. Chair Powell, after today, you have 2 meetings left as Fed chair. You've obviously experienced a lot during your time as Fed chair, served under multiple presidents. I'm wondering what advice you have for whoever your successor might be.
Honestly, I'd say a couple of things. One is, stay out of elected politics. Don't get pulled into elected politics. Don't do it. And that's another thing. Well, another is that, our window into democratic accountability is Congress. And it's not a passive burden for us to go to Congress and talk to people. It's an affirmative, regular obligation. If you want democratic legitimacy, you earn it by your interactions with our elected overseers. And so it's something you need to work hard at, and I have worked hard at it. So, and the last thing is, it's easy to criticize government institutions so many ways. I will tell whoever it is, you're about to meet the most qualified group of people you not only have ever worked with, you will ever work with. And when you meet Fed staff, and not everybody's perfect, but there isn't a better cadre of professionals more dedicated to the public well-being than work at the Fed.
Thanks for that answer. If I may follow up, as I'm sure you've noticed, gold and silver prices have experienced historic gains of late. And I'm wondering how much attention, if any, you pay to those moves and what message you may take from these significant price increases we've seen for precious metals.
Don't take much message macroeconomically. The argument can be made that we're losing credibility or something. It's simply not the case. If you look at where inflation expectations are, our credibility is right where it needs to be. So we look at those things. We don't get spun up over particular asset price changes, although we do monitor them, of course.
Nicole, for the last question.
Hi, Nicole Goodkind-Barron's. Some prominent critics have charged that the Fed's economic models are somewhat backward-looking, but should be more forward-looking, incorporating things like productivity increases from AI. How do you incorporate current and future developments into your analysis and decision-making, and do you have an answer to those critics?
If you incorporate that, you can't cut.
Yeah, so by and large, those criticisms, as somebody on the inside, they just don't make sense, and I'll tell you why.
Yeah, 100% they don't.
Every FOMC participant writes down a forecast every quarter, right? The summary of economic projections, and that's the basis for how we think about the economy. So, and the other thing is, what an economic model can do is it can grind up all the data for the last number of years, 50 years, let's say, and it can identify what are the relationships between variables A, B, C, D, and all that kind of thing. And it can tell you if you change one of those variables, this is what should happen in the macroeconomy. That's just the way it works. However, the structure of the macroeconomy is constantly changing. For example, we hadn't had a pandemic in 100 years. It wasn't in the model. And we knew it from the very beginning. It was not in the model. A trade war of this scope, we'd never had that in 100 years. And so there's great uncertainty at different points. Another thing I'll say is, when it comes to, technological developments that raise potential output, some kind of technological revolution like happened in the 90s here and like maybe happening now with AI. We're all over that. And, everyone studies those periods and, we're very clear-eyed about the possibility that this higher productivity may persist. and also that it may not. We're not. No one's sitting here unaware of the possibility of higher productivity. We've been talking about it for 3 years. It long predates the current situation. It's been going on for 5 or 6 years. We've had productivity higher. We've been talking about it that whole time. So it's very much on our minds, and we are well aware that higher productivity means higher potential output, and it changes the way you think about potentially inflation, growth, labor market, and all those things. That's all in our models. I mean, if it's just a question of using better models, bring them on. Where are they? We'll take them. But I think, we certainly are in contact with anybody who does economic modeling.
I don't know. I think S&P will do it.
And we're always looking to do better at that. But that's how I think about that.
And just a quick follow-up. We've been talking a lot about tariffs and passing through, and we've been talking a lot about them for the past few months. The trade landscape is still in a constant state of flux. Announcements, threats, negotiations, they're all frequently changing. So I'm wondering how you actually track these, what data or channels are most critical to follow this in real time?
Trade?
Yeah, the impact of tariffs and how they're changing.
Yeah, I think our staff has done a really nice job on that, and they've kind of put it together in real time. So as I mentioned, a tariff gets put in place, you can pretty much track its effects on pricing and on everything. And so you build a model up from all of the tariffs. At the beginning, it was very much of a forecast. Now it's every cycle that goes by, it becomes more informed by actual data. And our forecasts were not far off. What changed was, as I think I said earlier, what was implemented was smaller than what was announced. In addition, we didn't see retaliation internationally, and I think people did generally expect that because we saw that in the past, and that really mattered too. And then the other thing is that pass-through didn't know how fast that was going to be to consumers, didn't know how much exporters would take, how much companies in the middle would take, and how much the consumer would take. And it turns out it's a lot of companies in the middle who, by the way, are pretty strongly committed to passing the rest of it through, which is one of the reasons why we need to keep our eye on inflation and not declare victory prematurely.
Trump say anything?
Thank you.
We're done?
We're done.
Okay. Thank you very much.
Yeah, dude. Yeah, I'll show you. Texas Instruments. All right, yeah, that's great. Back to our normal, regular programming. So if we go to Texas Instruments, you see Seagate? That was nuts, dude. This is nuts. The fuck? Dude, let's check this out. Well, not yet. But yeah, we survived. Yeah, dude, that's crazy. So if we go to here. So if we go to earnings. They're not going to give them to me? What? Okay, here it is. Man, last earnings, they took a big hit. Like last two earnings, they've just been getting punished. It's like negative 13, negative. Like this was like, bam, And like a couple of days later, it like recovered a bit, but it was like, it was down. And then, bam. It had really like earnings. Oh, he's going to say something. I just don't know what it is. He was supposed to be speaking today, but he didn't. I think that was a dovish. Like they're just saying, look, data dependent. It was neutral, right? Which is dovish because I think I wanted to cut, but whatever. I mean, we got easy. It was dovish, I think, because we got easy. Man, I swear to God, that matters. This part here matters. This matters. And they didn't talk about this. And I'm super surprised they didn't talk about it because they should have. But this is dovish. This right here. Bam. dovish. Bam. This. So if I press shift, nope. If I press control, nope. Oh, yeah. If I do, oh, nope. Right there. And then this. Those two lines right here are dovish, in my opinion. I could be wrong here. I'm not a Fed freaking. And I wonder if this was increased. So yeah. Now we have what? 30 minutes until data. All right, I'm gonna put music on. Onitoro. You never invest alone. Now we wait a bit.
They wrote it off, said it was done. Solo watch, no second run. From market love to market trash. First solo caught in the crash. Clean energy out of style. Rates went up, stocks went wild. From leader name to bargain bin. Wall Street counting it out again. They see panels, think it's old. Think it's China, cheap and sold. They miss the tech, they miss the edge. They miss who stands on US soil instead. They threw it down, called it done. But First Solar still stands in the sun. For a PE at 10.5. Growth price like it won't survive. Garbage label, bargain price. For a business built it last this cycle twice. While the crowd chased faster names. First Solar waited in the flames, oh yeah. Trump pays win, makes that clear. Talks about eagles, turbines near. Wind gets hit, solar stays. China panels in the global mess. He hits Beijing, not the sun. Mess up. Solar slips while wind gets none. First Solar US made lines. Not cheap imports, different signs than our wind. They're not noise. The domestic supply for serious joy. Still with nine, go to track. Wild contracts stacked and margins cash for multiple says no hope. Backlog says you better go. Not a hype name, not a meme, just steady cash and long-term theme. While traders laugh at Solar name. First Solar plays a deeper game, oh yeah.
It's not, it's freaking, I thought it was.
Yeah, yeah, yeah. Data center, burning bright. Training model, day and night. Grid low, climbing base.
Futures?
Solar becomes a plug-in when it doesn't care about debate. It needs power at massive rate when demand runs past the grid. Solar's where the gap gets filled. Not the headline, not the star, but the fuel that runs it all so far. 10.5 for growth is strong. That math feels seriously wrong. If AI keeps driving low, this stock won't stay on discount mode. Not 200, not this zone. 350 power zone. Not a dream, not a stretch.
I really like this one.
They were kings of the silicone throne, Intel inside every home. But the clock speed slowed and the foundry slipped. They passed them, they lost the grip. AMD running, NVIDIA flying.
It's gotta sell off into the close because the market has to do
down year from grace. 60% gone, blood on the place.
It's okay.
Billions burned, factories late. Promises heavy, execution weight. Wall Street talking, headlines cold. Legacy giant, growing old, the breaking point, boardroom tense, pressure loud, shareholders restless, patience out, past step down, the era closed, interim hands, no clear road. They went through hell in a silicone storm, half built their margins torn, from market leader to comeback tail, falling knife in a broken rail. But when the fire burns a week away, only steel and vision stay. From the ashes a new command, Intel down and Intel stay. Intel down and Intel stay. In the lip book, March 25, Cadence mine, back to revive, cost cut sharp, org chart lean, no more drift, execution machine, middle layer stripped away, foundry focus, make a break, Wall Street knives, the tone has changed, from excuses to rearranged, jobs were cut, pain was real, but discipline brought back the deal, from chaos to control retreat, turn around beats on a tighter beat. They went through hell in a silicone storm. This AI waves pride to form. From 60 down to hope alive. A stock that learned how to survive.
Whoops, sorry.
But discipline brought back the deal. From chaos to control retreat. Turn around beats on a tighter beat. They went through hell in a silicone storm. This AI waves pride to form. From 60 down to hope alive. A stock that learned how to survive. Through layoffs, loss, and factory fights. They rewrote days and sleepless nights. From broken plans to forward drive. Intel bruised, but Intel alive. Last few months, price woke up. Dead money turned to runner up. 80% in 25. From the grave to back in the fight. Government chips at stake. Foundry dreams start to wake. Until 18A on the line. American Fab's future sign. From laughing stock to second look. Shorts got burned, bulls were booked. Not a victory lap, not yet crowned, but the bottom might be in its time. This ain't hype. This ain't a meme, this is restructuring a broken machine. Still behind in the AI race, but back in the long-term case. Execution over empty talk. No more promises, just a harder walk from has-been to maybe again. Intel learning how to win. They went through hell and paid the cost. Market share and trust were lost, but new blood, new rules, new spine. From legacy weight to forward grind. This is the story Wall Street loves. A fallen giant trying to rise above. Not a miracle, not a trend, just a company fighting to be relevant again. From 60 down a fighting form. From chaos to control reform. Intel's not king, but it's not dead. This is chapter 2, not the end. Oh, 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 oh. God.
We have what? 30 minutes until we have Microsoft right off the bat, then we have Tesla, and we have Microsoft. Which IBM might actually be good.
He points at the map like a menu. Circle on the ice, calls it next week. Gold in the ground, he can smell it. Greedy little glimmer in his teeth. Greenland, brown
I'm not
sand,
speaking close, that's the thing.
who cares? As long as it burns like gasoline. Every border's just another busted vending machine. Trump wants your house, your car, your life, your Sunday peace, your tired wife, every last drop, every last dream. He wants everything, everything. Trump wants your roof, your keys, your land, your sacred book, your open hand. Every last song, every last dream. He
It's so good.
He stares at the South like a buffet, dark crude shimmering on the plate. Smiles when the pipelines glisten, says freedom, but he means interest rate. Noble words sprayed on the label, perfume on a poison deal. Sells your pride in a plastic bottle, leaves you with an empty field. Trump wants your house, your car, your life, your Sunday peace, your tired wife, every last drop, every last tree. He wants everything, everything. Trump wants your roof, your keys, your land, your sacred book, your open hand. Every last song, every last scream. He wants everything, everything. He wants the land. He wants the sea. He wants your voice. He wants your sleep. Oh, he wants the land. Oh yeah. He wants the sea. Oh yeah. He wants your voice. He wants your sleep. We got a rhythm in our grieving. We got gospel in our scars. We got villages of voices. He can't fit inside his cars. Trump wants your house, your car, your life, your Sunday peace, your tired wife, every last drop, every last dream. He wants everything, everything. Trump wants your roof, your keys, your land, your sacred,
Oh, man.
your open hand, every last song, every last scream. He wants everything, everything.
I love this. Because I wonder how long it would take to update. Because this one's updated. Holy fuck. Goodness. Why did they sell off at the open? Did they take?
I placed a jar in Tennessee, and round it was.
Companies I'm paying attention to, by the way. GEV. I was surprised at the fact I got a
Once
really
just
good
graphics,
deal.
gamers and screens, frames per second, cue to dreams. Quietly the building deep while Wall Street was still asleep. Data centers in the background hum, training models one by one. Then the spark, then the gold rush call. AI season, Nvidia's ball. Earnings hit, guidance broke. Market woke up, numbers spoke. Demand too strong, supply too tight. Every quarter another beat and raise night. They put the crown on Jensen's head. Leather jacket, words well said. From chip supplier to AI spine. Every model standing on that design. If AI wins, Nvidia eats. Picks and shovels for digital streets. Not just hype, not just a run. This is what dominance looks like when it's done. Triple digits, year on fire. Revenue curves that never tire. Margin fat, backlog long. Every hyperscaler singing the same song. Blackwell name, next gen heat. Customers lining up in sheets. Capex wage from Big Tech 5. Nvidia riding where the budgets drive. They put the crown on Jensen's head. From gaming rigs to where I sped. From chip maker to platform king. Software, hardware, everything. CUDA mode, ecosystem wide. Competitors try and still deny. When the models trade and the data flows, Nvidia's where the money goes. Stock cool down, then ripped again. Profit takers, then new highs and valuation loud. Skeptics talk, but order still on a non-stop walk. H1 is sold, H1 is booked. Blackwell waiting, market hook, not a bubble, but not cheap. This is what a cycle looks like at peak. Competition coming, custom silicon too. Big tech dreaming of cutting through, but switching costs and desktop pain keep video in a mainframe lane. Every cloud wants their own chip crown, but Nvidia already owns a town. Not untouchable, but far ahead. This is execution, not just hype spread. They put the crown on Jennison's head. Built a dynasty, not just a thread. From GPU to AI control, from component to system roll. This ain't luck, this ain't trend. This is platform power compounding in while others chase and try to defend. NVIDIA's writing where the cycle ends. Oh, not a trade, not just a name. This is the backbone of the AI game. From frames per second to trillion run. This is how NVIDIA won.
And this is why Micron is up. This is the reason why Micron is up in 19% in the last week. I'm surprised next time I play.
Ticker flicker, all green or light. Talking heads grinning.
I'm waiting until earnings. We still have 22 minutes, so.
He tweets, it jumps, then dips like a drum. We dress it as alpha, but it smells like junk.
You can't, because they're printing
We're
money.
just waiting to get bumped by Trump. Clock on the wall going thump, thump, thump.
The thing is, like, you might be able to, but then,
but we're lined in a row at the edge of the dump. Yeah, we're waiting to get
like,
bumped by
I would think of the possibility of maybe selling calls if you have a position, but if you don't have a position, then like they're expected to actually, like, they still have a 16 forward PE if they meet expectations, and I'm thinking that they're probably going to surpass the expectations. That's the reason the stock's going nuts.
Swears this is the way.
It's like if you get a dip, this might be an opportunity.
Grinning like a slave. They float his name,
you know,
and the candles rise. But every high comes with the side of the mind. We're just waiting to get fucked by Trump. Clock on the wall going thump, thump, thump. Ay, 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 ay. Ay, 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 ay. Ay, 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 ay. Ay, 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 ay.
I have zero control.
Crooked grin. He's on every
That's the
damn
problem.
screen again.
Usually I have more
Orange green
control.
light, red fit. Everything's fine. While they stare, they pump air in that balloon. Cheap talk, boom times too soon. We toast gains in a plastic cup. Knowing it
I
all
appreciate
blows
you
when
guys.
he blows up.
Thank you.
We're just waiting to get
keep me
drunk.
honest.
House of cards.
Like, if I speak like this, I should be able
All
to
this
speak
paper
good.
in our hands. Built on bluster, built on scams. We're just waiting to get drunk. Watch the bubbles getting plump. Hold your breath, here comes the slump. We're just waiting to get
But that should be way better.
We're just waiting to get drunk. We're just waiting to get drunk. We're just waiting
And
to
I'm making like Latin music. It's a rabbit hole.
He tweets, market jumps on cue. Rich men laugh in a private view. They bet big on a rich roulette. Heads they win, tails wearing debt. He signs deals, headlines sing, but the fine prints hide in the sting. We clap along to the marching band while they sell the
S&P
floor from
500
under our
flat
stand.
this
Oh
session.
yeah, we're just waiting to get drunk.
Which is
House of cards
interesting because we
getting
could see a
all this
revival
paper
of
in
the
our hands. Built on bluster, built on scams. We're just waiting to get drunk. Watch the
People are
bubbles
trying to
getting
front run this.
Hold your breath, here comes the
But
slump. We're just waiting to get drunk. How many paychecks on the line?
this is like, for example, like, if you look at
it's high. How many pensions in the
By the way, let me know
fire
if it's
so
good.
we can climb a
Give me
little
a-
higher? What?
Like Microsoft took such a big dive. Like here, it just looks so good.
We're just waiting to get Trump. House of cards getting bumped.
And then here we're
All
touching
this
resistance.
paper in our hands. Built on bluster, built on scams. We're just waiting to get Trump.
It's nothing
Watch
major.
the
It's just
bubbles
a
get
crazy,
to pump.
the way that
Hold your breath, here comes the slump. We're just waiting to get Trump.
Ahead of Upstart was fiscal Q2. Bank of America.
We're just waiting to get
Trump. Reiterate bullish ratings. So Microsoft stock price starts. Analysts expect non-GAAP EPS of $3.91 and revenue of $80.3 billion. With prediction markets setting a 92% chance of a beat. Really? You know what? I'm gonna do this. That should fix it. Yeah, I'll check it. I'll check it for sure. Let me know if this helps. This should fix it. Because it might just be that it's giving priority to the audio coming from the thing. Which very likely. Oh, wait. Look at something. Huh. Should be this close, but that should be, I should be peaking here. This should be really loud. I wonder. Market's selling until the close. I wonder, this should be good. This should be good. I could. Oh, I was muted. This here. So this. What did that have? It had the bottle of whiskey, I think. And then it had. Let me check. I don't think it has anything anymore. I think that had the bottle of whiskey. No, that's a lie. It has a bottle of whiskey. It has a bottle of whiskey. No, it has nothing. Man, I need to forget. So yeah. It had like a whiskey cup from I need to degust that, by the way. It has a whiskey. So one of those whiskey cups is from the parliament. So the eToro club invited me to the parliament for the diamond event. It was fun. Yeah, it was a good time. So yeah, they gave me like a bottle. They gave me like some chocolates and stuff. So it's like they gave me this cup right here, which is like the House of Commons. No, you can either have like so. Let me actually. So it's based on your what's it called? It's based on like you can get invited as a popular investor, or you can be a diamond or a diamond plus member, and then they invite you to like football events or like sport events or music events or all these different things, depending on what you sort of like. They open it up for people to join. So it's usually like really big accounts get invited, kind of thing. It was a good time. It was a great time. You know, I stole a bunch of stuff. Every time I go to eToro, I steal a bunch of stuff. I wanted to steal the mic head. Sam, you ever watch this? I want your mic head, and I'm going to try to steal it next time I meet you. Maybe. So far, I mean, like, there's a bunch of different perks. So it's really nice. Like, if you use eToro and you're kind of happy, then it's very good. Nice. Your platinum? So yeah, I mean, well, let me have a look. Because right now, I think they want to monetize that, which I think they might just lose money on it. I think it's just like expenses, right? So have a look. So yeah, like right now you have to pay to join, which is weird. But like, sure, you're platinum, but if you can get to diamond, is when they invite you to things. So yeah, it's like invitation to diamond member events so that's from the diamond member events. They tend to be really good. And then the popular investor program has the meeting, the popular investor summit, and that's really good. Like that's worth it because you meet people that are interested in doing the same thing as I do. That's how I met Dimitris, Mimi, Akeem, Timothy, all of them, right? Man, I never got mine. And I'm kind of pissed. They were like, yeah, you go. I didn't get it. I never got my thing. This could be eToro branding. I got the towel. Too, but I thought that the towel was for the summit. So maybe they were just giving out towels. But I was supposed to get a headset. I was supposed to get a shirt. Like, imagine if this microphone head was the eToro one, which I love. It's very cool. But Sam won't give it to me. They protected it very well. I tried to find it and I couldn't. But I managed to get that last time. That was my first eToro Summit thing. Yeah. I say if you can join it, it's a no-brainer. Yo, does it sound better? It should be better, no? Oh, yeah. Like, I ordered mine a while back. I got the diamond card, too. Which this is not the diamond card, but... This is my eToro card. Lols. My brother gifted me the Charizard to put on top of it. So I just go around paying with the Charizard. It's pretty cool. Yeah, I get you. I have to figure out because like I want to put a little bit of music, but not putting music creates a problem with the thing. So, and the market is closing. The market on close balance is showing selling pressure on the S&P 500, selling pressure on the Nasdaq, and the Dow continues to surprise many investors as it is a pre-balance. It's funny because like Google, Nvidia, like Nvidia has who has really big risks here? Nvidia has really big risks. Google has really big risks. I wouldn't think Meta does. I actually think Meta would be good. When does Amazon have earnings? I'll check out the VOD. I just have to mess around. The thing is, just like usually I have so OBS, which is the thing that I normally use. And if I knew I was going to be alone, I would have just used OBS. I can control the volumes and I can play around with them. But on Riverside, I can't, which sucks. Yeah. Microsoft expected. Yeah, here you go. So here are the results we're expecting here. Well. Today is a great day to be an investor. Like you have to, you have no idea. Like if we are on the journey. Get ready, everybody. So these are the numbers. Microsoft, $3.92 with 80 billion in revenue. Meta, $8.19. But then we are looking for deeper. So this was last time. So if we go here and we go SFT earnings. Problem is Microsoft. We're going fast enough, but this was, I don't like the information. If the information says stuff, I don't trust them. But this was a rumor that was going on last time, in last quarter. So we'll see if it's true. Because Copilot could be taking a hit here. Unlikely, but it could. Denmark, Greenland, and the U.S. Met on West. It's so crazy. Yo, did I call the freaking Greenland thing or did I call the freaking Greenland thing? I'm not gonna lie, I did. I'm not gonna be humble about this. I called it like a buck. Market freaked out over Greenland, and I was like, "What are we talking about here?" I'm glad I didn't sell. You know what? That's not true. I did sell some things. I sold my 5x just in case. I wasn't sure. 486. Who gave you this target you speak of? Let's have a look. Okay. So January today, Stifle said is a buy, but from 640 to 520. UBS said Microsoft is a buy from 650, but it downgraded to 600. So there are downgrades on Microsoft. Interesting. They just want to buy before the market. That's it. So they put it down, market drops a bit, and then they buy. Citi says from 690 to 660, and then Mizuho says outperform 640 to 620. Insane.
Someday peace.
All right. 4 more minutes, ladies and gents. In today's latest episode of The Market, Micron with $100 million worth of buying. There's $1 billion worth of selling into the S&P, into the close. Intel up, AMD up, Goldman up, Meta, Google, Microsoft, Apple. The Max 7 here is just de-risking from the Max 7. I wonder where it's going to open it. Let me have a look. All right. It won't show. I have to log in, which is weird. Abercrombie's fighting a footing into the close. That's hilarious. Two minutes until Microsoft earnings. By the way, I'm just gonna do the earnings, and you guys have to read up on the friggin' news, or wait for tomorrow until I give you. I'll probably see, but I'm not gonna stay on the call because they're so boring. Like, it's just gonna be Asher. So usually they're pretty good on giving you all the data here with this. I'll read it out loud when I can. Actually, we should be able to share something else. I'm going to share here, and I'm going to share a tab with audio. Let's do that. Let's try this out. All right, ladies and gents. One minute remaining for Microsoft earnings at the close. We should have Microsoft price.
1 minute going out to get Microsoft earnings.
Can you hear the bot? Not the bot. He's not a bot. He's an actual guy reading this stuff, by the way. I think. Because they change him. This is like... Are we ready to rumble? Good. All right.
10 seconds.
Selling into the close. No news yet. You'll see this move.
Still waiting on Microsoft earnings to come through.
You'll see it move. Let's go. Ladies and gents, get your trades ready. Ooh. Bots are selling.
EPS of $5.16, $5.16. That's a beat on the estimate of $3.92. Revenue, $81.27 billion.
It's a massive beat.
$80.31 billion. Second quarter intelligent cloud revenue, $32.91 billion. A beat on the estimate of $32.39 billion. Second quarter Azure and other cloud revenue, excluding FX, plus 38%, in line with the expectation of 38%. Meta data coming through now with an EPS of $8. So fourth quarter EPS of $8.88 compared to the year-on-year of $8.02, and that's a beat on the estimate of $8.19. Revenue of $59.89 billion, a beat on the estimate of $58.42 billion. And Meta sees first quarter revenue between $53.5 billion to $56.5 billion. Estimate was $51.27 billion. Just keeping an eye on the S&P 500 here. Just seeing
Yeah, it's a real boy.
Did see a little bit of movement towards the downside just before the earnings came through from Microsoft. Going back to Meta earnings, fourth quarter Reality Labs revenue $955 million, a miss on the estimate of $962.7 million. Family of apps operating income of $30.77 billion, a beat on the estimate of $30 billion.
Yo,
Reality
Microsoft
Labs
having a
operating
massive
loss
beat.
of $6.02 billion
25%
compared to
beat.
the estimate of $5.8 billion. And family of apps revenue $58.94 billion, a beat on the estimate
Is
of
this an FX?
$57.47 billion.
They're not bad at all. I'm wondering why we're seeing such negativity. We still haven't heard about CapEx.
Meta sees 2026 capex of $115 to $135 billion compared to the estimate of $110.62 billion. Microsoft says that commercial remaining performance obligation is $625 billion. Meta sees total 2026 total expenses between $162 billion to $169 billion. The estimate was $151 billion. So again, Microsoft beating its EPS estimate of $3.92, come in at $5.16. Revenue was a beat as well at $81.27 billion compared to the estimate of $80.31 billion.
Oh,
So seeing Meta shares falling 3% as 2026 capex forecast exceeds estimate.
They're getting punished for spending money still. Wow. Yep. Yup. What's the problem here?
Tesla earnings come through now. Adjusted EPS of 50 cents. That's a beat on the estimate of 45 cents.
Meta beat. This is a massive drop for Microsoft. Holy smokes. Vea. Que iba a sacar a Nico y tal, pero. This is a buying opportunity. Why is this so bad?
It's waiting for more data to come through now from Tesla. Also, just keep an eye on Microsoft shares sinking 8.1% after reporting second quarter earnings.
That's
Tesla says in Q1 of this year, we plan to unveil the Gen 3 version of Optimus.
What's Tesla doing?
Meta's first quarter revenue view assumes FX of around 4% tailwind to year-on-year revenue growth.
Someday dream. Tesla's holding up here. Microsoft taking a beating here. Makes no sense, in my opinion. Holy. I don't have that much Microsoft, but I'm surprised at how this is acting.
Also seeing Tesla's fourth quarter EPS compared to the year at 24 cents compared to the year-on-year of 66 cents. Fourth quarter revenue, $24.9 billion, a miss on the estimate of $25.11 billion. Fourth quarter gross margin, 20.1%, a beat on the estimate of 17.1%. Fourth quarter operating income of $1.41 billion, a beat on the estimate of $1.32 billion.
Let's have a look at the after hours here, but yeah, I mean, this is gonna
Tesla fourth
move
quarter free cash flow $1.42 billion, and this on the estimate of $1.59 billion.
Holy smokes!
So Tesla
You're
shares
looking for a Microsoft
edge lower
opportunity
in
to get
extended
back
trade
in.
following
It's
results
here.
last down about 0.7%.
Wow! Wow! You had told me this? I wouldn't have believed you. What's CapEx? Microsoft CapEx. They still haven't given me that, have they? 2026, Meta is increasing capex. I'm up. Like my stocks are not affected. My stocks are actually benefiting from this. Nvidia is benefiting from this. That's so weird. This is a buy. I'm gonna buy. Do I have? That's such a big hit.
Microsoft says that 365 commercial seats grew 6%.
Yeah,
and
because they're
45% of
gonna
commercial
put
RPO
out the
driven by
third
OpenAI
Optimus
commitments.
third variant or whatever.
And commercial remaining performance obligation, as said earlier, $625 billion.
Microsoft just deleted like that's a lot.
Seeing Meta shares turn positive after falling as much as 4.7%.
Meta is turning around too. Check this out. So I have this guy speaking on my ear all day. It's like no matter what I'm doing, I'm washing dishes. I have this guy because he might just tell me something. I'm so baffled. Like, what happened in Microsoft that's causing?
Meta sees fiscal year 2026 operating above fiscal year 2025 operating income.
Holy smokes.
IBM earnings coming through now with fourth quarter operating EPS of $4.52, a beat on the estimate of $4.28. Revenue, $19.69 billion, a beat on the estimate of $19.21 billion. They see fiscal year revenue at constant FX above plus 5%, beat on the estimate of plus 4.12%. Fourth quarter software revenue, $9.03 billion, a beat on the estimate of $8.82 billion. Free cash flow, $7.55 billion, a beat on the estimate of $6.85 billion. Fourth quarter consulting revenue, $5.35 billion, a miss on the estimate of $5.38 billion. IBM sees fiscal year free cash flow to increase about $1 billion year on year.
But even IBM is up. That's crazy talk. I just bought some Microsoft. What? That's crazy. That's such a big dump for Microsoft. Like we're talking, like that's sizable. That's $150 billion. That's sizable. It's my buying price. I bought a 453. Let's go. I'm making $2. Lows per share. That's hilarious. Holy, this is a nuts beat. What am I missing? Okay. I'm super bullish. This is fantastic for my portfolio.
Seeing Microsoft second quarter adjusted EPS coming through now, $4.14.
100%. I don't understand what happened here. I need to read. Like this, like I was gonna bail. In all honesty, I was gonna bail. But this is sick. That's another song tomorrow. What in the world? Holy smokes. I wonder, oh my God, I want to hear this. What in the world? So,
again with Microsoft, second quarter just DPS $4.14 compared to the estimate of $3.97. Tesla is to invest $2 billion to buy Series E preferred shares of XAI.
All right, constant currency. The current, you know what it might be? It might be the currency.
Microsoft Cloud gross margin percentage fell year on year to 67%.
And like the biggest drop of the dollar has just come in. So it's like this could even go higher. What? Microsoft returned $12.7 billion to shareholders in the form of dividends and share repurchases.
So seeing IBM shares rising 4% after fourth quarter operating EPS and revenue beat estimates.
I am so baffled by that. Look at Meta too. Meta, like I'm surprised, dude. That was such a weird move. Look at IBM. I don't own any IBM, by the way. What? Thank you very much, I guess. Market's been giving like great opportunities lately. I don't even know what's going on. Probably AI trading. I love that. Keep them coming. I'm up too. What in the world? Holy smokes. That's what you come to the Market Boss to figure out what's going on in markets. Don't forget to hit that like and subscribe. Even though the couple of guys watching are always here. That's fantastic. You might not get the chance, man. I'm weirded out by this. Like it's either they got benefits
Meta
from
shares
the
extend
FX.
gained 4.9%.
Meta's up 5%. Like Meta bounces from here. I'm super excited about Meta. And the fact that Microsoft is not joining that rally, I'm baffled by that. I bought here a week ago. What? That's insane, dude. All right. All right. Summary time. Jerome Powell continues his dovish stance. Insane. What an insane day to be an investor. Meta up on the day, 3.4%. It's actually a little bit higher, actually 4% on the day. IBM up. You know, IBM is actually doing really well. It's like starting to catch up because of their expertise and all the things that they're doing. Like they make money because it's just they're consultants pretty much now. It's kind of weird. Then you have Tesla up. Even Tesla's up and Microsoft's not up. Like this is outrageous. ServiceNow. Did they have earnings today? I think they did. Software is getting so punished. Wow. Wow. Whoopa! Whoopa! You see, that's why I don't like showing my stuff. You guys know my eToro. Insane.
House panel Republicans say EU policy is targeting X.
Insane. Yeah. Holy smokes, guys. Is this it? Impact from investments in OpenAI. They're not talking about CapEx here, business outlook. So, okay. You know what it might be? The fact that they're not announcing here, they're announcing in the call. So this might recover by the call. This was a massive beat, man. This was a massive beat. In all honesty, All right. So so it was 4.41, which is still a beat. Okay. So the majority of the wins from Microsoft are from currency issues, like the currency, the US dollar devaluation has made it go up substantially, almost $1. So it's almost 25%. That's insane. That's pretty crazy. So maybe that's why we saw a little bit, but it's still good. It's still a good beat. Insane. Best alone. Where? Oh, look. Let me update. More than 7% after fiscal Q2 showing revenue of 81.3, which is a bit of $1 billion, and the net income 60% up to 38.5 billion. I don't see the problem here. Yo, I'm telling you, potential guidance goes up in the call. Am I staying for the call? Ibe? Ah, ¿y tú cómo va? ¿Por qué? ¿Y no lo puedes devolver? This probably recovers. I mean, it's not bad. Like, the problem is Microsoft is such a slow account, you know? Commercial core revenue increase. It's 14% growth, 27% growth. LinkedIn revenue 11% up. Pretty insane. I'm not gonna lie. Pretty insane. Antonio says hi. Huh? Are you done with the stream? Come on. Are you done with the stream? No, not yet. ¿Por qué? Can I show you on the stream? No? Not allowed. You're not allowed to see her. Sorry. Nobody. It's like 3 guys. Antonio's there. That's it. But this shouldn't account. The December shouldn't account for currency expectations, or are they taking it in right now? They could be taking it in right now. Wow. IBM continues to pump. Insane. All right, let me show. Let me share my screen. I will share that. I'll share that. I'll share that message. Yeah, check this out. Lol. That's hilarious.
So Besant CBS just saying Fed independence does not mean no accountability.
Look at that. That's insane. If you asked me the calculated people have figured that out, I wouldn't have to be like, yeah. You know who I'm going to bet money on? That's hilarious. Was I going to show? Oh, they added this. This is very cool. Yeah, I know. I'll show. IBM is 9% from the 52-week high, which is very cool. And look at Oracle. Ooh, that's so cool. I love Finbase. Not sponsored. I'm just a fan. By the way. What's I gonna do? Help me find this. After hours. There we go. Yeah, IBM is pumping. You know, IBM. I don't find this crazy, to say the least. Like, I'll show you. So if we go to financials here, a quarterly dividend. What? They're gonna pay a dividend? Insane. All right. So, man, what was the other time? It's like this. Okay, this was a while. This is a while back, but they were like up. Like the last time I paid attention to them, they were up. You know. It's like, no. What price did I say I would buy Oracle? I said I was going to buy Oracle. Like, there's so many other good trades. You know, that's the problem. So it's like, so if you go to stock detail, you can figure it out. So it is touching my level. I said at 160. I could see at 160 if everything else stayed the same. I could see them as a purchase here. A 160. Right now they're sitting at 172. Like, they're the closest they've been for a while. The problem with Oracle is the fact that they have like all of these promises based on OpenAI, right? And they obviously have other businesses, but it's like if OpenAI fails, a lot of people lose a lot of money. So yeah. It's a great day to be an NVIDIA investor, Micron investor, Intel investor, Fluence investor, Meta investor. You know what? I'm gonna say it. Even Microsoft. I'm kind of surprised the fact that Microsoft it's not doing well, but it has to do with the dollar weakness. So it's like if we see a reversal on the dollar weakness, this could have negative impacts on earnings. You know who said this? Lale told me that it was like, I think it was like for every percent, or for every percent that dollar goes down, earnings increase by 5% or something like that. It was something crazy like that. I have to ask her again. I'll have to ask her what she said. She's OP. Like, if you guys don't listen to Lale, like, she gives free live streams every Monday or every Tuesday. She OP. Props to Lale. She appeared in Bloomberg too, which is, I'm so jealous. That's so cool. That is so cool. Oh, I know. Vitaro, I'll be an analyst. The thing is, I want to trade my own account, so I don't know. Depends on how much they offer. I'm open. I'm open. to get back up. Oh, I think they recover. I think this recovers. Man. It makes absolutely no freaking sense. That's such a big beat. That was such a big beat. What happened to this is from until December 31st. Of what? I have so many accounts.
Seeing measure shares extend gain to more than 5%.
Of course. So my eToro portfolio, so of course, I have like 5. I divide my money between. I only have 1. I don't know what I'm allowed to say, actually. I don't have and I don't compete with eToro. But I don't know what I can say. Odd. I'm not sure what I can say. But yeah, I have multiple accounts. To say the least. Multiple. I'm not sure. I know I can, but I don't know if the channel can. You know what I mean? So no, I only have my eToro account. But yeah. Nobody watches this. It's the one show that everybody will watch. Imagine that. 2 hours and 41 minutes into the episode. Man, I'm still wondering why. Yeah. I live in Scotland, Graham. We're going to do the call. I mean, I can do the call. I'm wondering why they went so down here. Let me. You can download the press release on Word. That's hilarious. Ay, verga. That's so good. Scotland's great. Scotland is fantastic. It needs more snow, less water, more snow. It's pretty good. Nah, it's not like it's not that common, but they do. Like, it's pretty badass. I'm not gonna lie, it's pretty badass. All right, what was I gonna do? I'm gonna do the call. You know what? I'm just gonna do earnings hub and be done with it. Up. I'm late. Yep. Nothing. You know they're super expensive. Like those, like the kilts, they're super expensive, dude. You buy me a kilt, I'll wear it. Like for sure. I'm probably gonna buy myself one before I leave here. 100%. They're badass. Like you get them with your like family seal and stuff. Wow, that's just so big, dude. All right, Danny, this ain't loading for some reason. I wouldn't be surprised if they're getting like jammed, actually. It's only rain, so. Oh wow, it's literally not loading. In the world. I mean, all of AI is pumping. It is not charging. It is literally not charging. The call is not live yet, is what I'm thinking. Oh, it's in an hour? Yeah, no. That ain't happening. The call is in an hour. Why is the call in an hour? Insane. Yeah, it's pretty crazy. It wasn't loading. Are you okay?
I will be.
I need to get my house fixed, dude. she just ate a peg boy.
Yo pensé que me iba a dejar porque me bajó en el carro.
¿Quién?
Ross. Y me vas a esperar para ir otra vez arriba. Y me dice, nope. Y yo vengo y digo, pero ¿por qué no?
Divorce.
And then I was like, come on, let's go on a walk.
That's my sister. I don't need permission to show. I just show because she's my sister.
Yeah. And then he's like, nope, not at all. And I'm like, come on. So I'm not going to take you.
What a
keep
day.
going. I was like, and then he took me down, and I was going up, and he called me.
Like Microsoft is
Sister,
bored.
like,
Microsoft is
"We're
like
home
Apple.
now." And then I was like, no, I'm not on my way home. And I kept walking Nico, like, he wasn't shot yet. I was like, okay, yeah. And then he's like, because the cats are all cuddled up, so if you're bringing him home, then maybe it might be hard and whatnot. And I'm like, I know, but you know, he's like part of the family too, like, because part of the family. And he's like, I know, but you know, like the cats, they might scratch him and whatnot. And I'm okay, and I'm walking back into like the garden area there for him to take a shit. And then I see Ross's car, and I'm like, and then I go like, and then I go like that for him to put his like window down, and I go like, how you doing?
Hello.
Do you come here often? I would visit. Yeah, he lied.
Did you hear my song?
Which one? Oh, about the Bea to busy because I'm at work. I don't know how you're doing it, but low-key need to like meet up with you to see how the fuck you're doing all that AI stuff.
It's cool.
It's pretty cool.
It's so cool.
Who's that? Hi.
Yeah.
I don't know who this is. Hi, sister. Who's that? Wait, what?
That's Graham.
Is that? Oh. Hi.
If you watch my streams, you will know who Graham is.
Why does it show up on the corner?
What?
Like, I need to go because Ross is waiting. Goodbye. How many people watching?
3. Antonio, Dragas, Graham. Ay, verga, it's so good. Ay, my God. My Doris.
Ciao.
Peace.
Peace.
Bye. So when are you leaving?
Saturday.
Ugh.
At 6 a.m. We'll be at the airport.
Is Russ going with you?
Rose needs to work and has to take care of the cats. We have cats.
Yeah. Well, you don't. You got excuses.
Graham, you're fine.
No, that's me.
Oh, that was you. Okay, I thought
It's
you
all
read
the
the screen and then I was just there like, Graham. I don't know. I don't know what it is.
Yeah. You want to see Nico?
Okay. He looks like a stutter. I can't see him. Bye.
Nico, he's the show.
Are you free tomorrow?
He's the family dog.
After work, I should be.
And he goes,
I come over? Or how do you want
me, I don't lie. I don't like lying. I really don't. I can spice the truth, but I don't lie.
Don't act like you're friends.
Hmm?
Don't act like you're friends.
¿Cómo qué?
Don't act like you are friends.
Yeah.
You're not.
He just went out. It's hot in here. It's Latin America. Yeah, Nico, don't jump. Don't jump. Don't jump. Don't jump. Yeah, dude. I'm not gonna lie. I have. I'm super bullish right now. What a day. I wonder if tomorrow will hold. Because this just took like a bunch of fear off the table. Arr. Nico. Welcome to Scotland. I could be living in Cyprus, but I choose to stay here. Oh my God, that's so good. That's so good. What a stream.
And I do the best ringing button.
Yeah. Coats are cheaper. Oh man. Okay, it's gonna be so late. We might just speak about it tomorrow. You know who's up still? SanDisk. Let's have a look at market reaction. Let's do an overview. And then I'm gonna cut it and then I'm gonna post it. Yeah, I like that. Check this out by market cap. Bam, bam, bam. She?
Needs keys for tomorrow.
I can't give her keys. Because I don't have keys. Can you take Nico? Can you take him out?
But you need to give me the keys then.
Come on.
You need to give me the keys then.
Yeah. Yeah, I can leave you with the keys again. Yeah. I need more keys for my house. I should have gotten them from my parents. ¿Tú tienes la llave de mi casa?
En mi casa.
Oh. Nice.
They are safe inside there.
All right. Let's do a little summary here. Just because. All right, so let me get on the right screen here. S&P 500 after hours performance. Oh shit. It's because everything is moving to the Max 7. Microsoft will be up by the end of the day, and then it'll be fine. And I'm back. So here's a little summary for everybody watching and everybody at home that didn't get a chance. The Federal Reserve was a nothing burger. Interest rates stayed the same, but there's going to be a little bit more liquidity coming into the markets as the Fed starts buying up to 3-year treasuries, which is very interesting. It's very interesting. So we are seeing a dovish Fed that is increasing liquidity into the markets. Earnings for the big Mac 7, or at least the start of the Mac 7, was actually fantastic. Microsoft had a massive beat, mostly because of Forex exchange values, which accounted for $1. But they had a massive, massive beat of. You see, so if you discount the dollar and the FX, it was $4.14. That's why it wasn't that crazy. So it was a 7% beat, which is still good for Microsoft because we're still waiting, right? Microsoft is a late stage player, but they're saying that 2026 is going to be a big year for the cloud. We are likely to see. So you see, like the big number, the headline number was bigger than expected. So that was the big problem there, but it's still very good. Meta is up 9% after earnings. And this was impressive. I'm not going to lie. Suck is speaking in the call right now, and people seem to be liking it. He had an 8% beat on earnings per share and 2.34% beat on revenue. CapEx massively increasing. They were expecting to spend 110. That is going to 115 to 130. Insane CapEx potential here. Tesla up. I mean, at this point, Elon just promised more stuff. I'm not even going to go deeper into that. And then IBM, quite a surprise here, going up 8%. So we are seeing the AI trade alive and well. That doesn't account for the day's increase in AI infrastructure plays. If we go back to the day performance, we see that NVIDIA, Microsoft, well, most of the semiconductor trades are up. NVIDIA lagging behind, but Micron, Intel, even Texas Instruments, which is insane to say the least, is massively up. And obviously the computer hardware companies are benefiting, companies like SanDisk, Western Digital, and Seagate, which I was not even paying attention to, but they are benefiting from the shortage in RAM and memory. Insane. UNH bounced from the lows today. It was a fantastic day. We were expecting a bounce. The company did get overpunished, we believe, but we'll have to wait and see for a potential bounce here. Health sector was down, but again, he's going to keep overpromising and under-delivering. The problem is the market doesn't care. They'll continue drinking the Kool-Aid for as long as it is. The thing is you can't stay away, but that's the problem there. What am I waiting for here? Watch from 10 seconds. Oh, this is New Zealand data. I was going to say, weird. All right. I think that's it. Anything else? We will be going live. I'm going to leave that for Dimitris, Mimi, and Timothy tomorrow. I might not be going live, even though I might be going live because I'm going skiing tomorrow. Because Scotland got a little bit of snow, and whenever you get a little bit of snow in Scotland and they open the ski lifts, you go. So you don't get a choice. So I'm definitely going to be going. I'm going to try to join from the mountain. We'll see if the internet is good enough for me to join. I'll probably just join anyways because that was fantastic. I mean, it's just, yeah. I want to understand the Microsoft. So make sure to check out the eToro portfolio. I'll probably post about Microsoft tomorrow. Or if not, I'm probably going to do the live stream. Any other questions you guys have? Shove them in the comments. I'll try to answer. If not, thanks so much for watching. I really appreciate you all. All right, that's the segment. Yeah, okay. I can stay for a little bit longer, but that's the segment. That's pretty good. I'm not going to lie. I'm getting better. I'm getting better of the cough. Tesla, I'm not even going to bother. Nico. Dude, look, I want a castle. In Christmas, we almost stayed at a castle, and I really want to stay at a castle. You imagine like a live stream from a castle That'd be so good. That'd be so fire. That'd be so fire. But yeah. Oil is up. Freaking nat gas is down, which is crazy, in my opinion. Palantir down 5%. Why is Palantir down 5%? They didn't have earnings, did they? Oh, by the way, tomorrow we have Caterpillar, Lockheed Martin, MasterCard, and Apple. It's going to be very interesting. All right. Thanks so much for watching, guys. You guys are the real MVPs. Thanks for keeping me company. I really appreciate you. Great day to be an investor. Yeah, it'd be pretty sick, dude. It'd be pretty sick. All right. Thanks so much for watching, everybody. Peace. Yeah, I'm game. I'm game. Gases are nice. I'm not gonna lie. All right. Thanks so much for watching, everybody. Peace. Freaking Microsoft, I swear. I swear. All right. Bye. 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 Insane. Good.